Alright, so I know I've talked about Shift Technologies a few times on my channel, but after looking back at those videos, even though I believe that the content that I made had value, I think I now need to make a video focusing on the negative factors when it comes to Shift. For transparency, even though this is a stock that I'm still buying, I will never be able to make this my number one position. And in this video, I'm going to explain exactly why that is. So the biggest argument I think people have when it comes to this company is the amount of cash that they're burning per quarter. And this is a real problem for Shift. I mean, if we look back at the past year, they're projected to have a net loss equivalent to their market cap. When you see it from that perspective, this company doesn't look that attractive. And even though they have almost $250 million in cash, they could run out of all that cash in the next 5 to 6 quarters. And that's assuming that they don't raise any capital or improve their profits. But one thing that I found kind of strange is the same guy from JP Morgan who said negative things about the company and lowered his price target also mentioned that Carvana has been burning cash for the last 10 years. So even though Shift right now is projected to lose all their cash in the next 5 to 6 quarters, Shift could have the potential to last just as long as Carvana does, especially if they raise a whole bunch of cash and reduce their net losses. But it has to be said that they cannot be burning this amount of cash each quarter or else they're going to be in big trouble. But this also brings up another caution flag, which is the amount of hiring that they've done this past quarter and this quarter. Being able to hire quality personnel now has become a whole lot more expensive over this past year. And simply just trying to hire workers has been extremely difficult for several companies, and Shift admits this. But there are two worries that could come out of this. One would be they won't be able to hire enough staff to sell cars to be able to expand further into the US. But there's also the fear that the increase in the number of staff could lead to much higher expenses and significant net losses. Now, from my perspective, it wouldn't make sense to me to hire more staff people if they have the fear of running out of cash in the short term. So I'm confident in Shift's strategy, but it's still a concern to pay close attention to. Another piece of the puzzle that could be negative for this company is the reduction in projected gross profits for quarter 4. With the decrease in the used car prices, their gross profits per unit could be a whole lot lower than the previous 2 quarters. This is not going to help the company at all when it comes to the amount of cash that they're burning. However, knowing Shift and recognizing that they have increased guidance 3 times in the past year, I feel that they could be underestimating these numbers as well. And I don't feel like this is really a big issue, because they would be on the same trajectory if it wasn't for the increase in used car prices. Now, with all that said, it would definitely be a concern for me if they were under $1,600 in GPU. And I will probably pay more attention to that metric than I will any other one. And this leads to the third piece of the argument about burning a lot of cash. The online used car business is not a high margin business. We can see this with Carvana, as even now, they are still struggling to generate profitable quarters. It is just extremely difficult to generate decent profits when you're dealing with buying, fixing, and then selling those cars. It's almost like trying to flip homes. And I know that there is a difference between the two, whereas homes tend to appreciate unlike used cars. And that means it's going to be even more difficult to generate higher margins. Now, as I said before, we did see the massive increase in used car prices over these past couple of quarters. So the appreciation helped these margins in the short term, but this will not continue. So where Shift is really going to need to improve is in their F&I space, which is their finance and insurance segment. This is by far going to be their profit center. If we don't see improvements in this segment, then Shift will struggle to become profitable. And honestly, I think a lot of investors, especially larger funds, realize this. I've listened to their quarter 3 conference call at least 3 times, and that seemed to be a common question amongst all of them. So in this upcoming conference call and earnings report, this will also be a key metric for me to look at. Another thing that could be negative for this company, as crazy as this sounds, is the possibility for a buyout. The first reason would be that depending on the deal, Shift shares only may rise so much. And for those that were buying at the highs, they may not be able to break even. Over the past week, we saw Carvana purchase Odessa, which is a US physical auction business, for $2.2 billion. Now, what does all this mean for Shift? Well, if the company struggles to raise capital, and let's say that they stay at current share prices over the next year, the amount of money that they could raise for dilution would be minimal. And that would mean that they would need to take on more debt. So for someone that could be buying this company out, they wouldn't need as much money to buy the company because Shift would be desperate. Now, personally, I think with this management team and the connections that they have, they will be able to get through this cash burn problem. But there is some evidence that points to this acquisition. We can see that on February 24th, Shift entered into a First Amendment to the employment agreement with CEO George Arison and the president Jeff Clements. So with the fact that there's been no news lately and this 8K that just came out, a buyout could happen in the near future. But as I said in the beginning of this video, I've been buying a little bit here and there. But considering the concerns that a lot of people have, including myself, this will never be a number one position for me, especially as of right now because we are not in a risk-on market. With the amount of cash burn and low margins, it's difficult to justify making this a number one or a number two position. As of right now, I believe that this is my third largest position. However, it will be transitioning into my fourth largest position because of the amount of shares I've added to Palantir. With all of that said, this doesn't make me bearish on the company. I just wanted to share some valid concerns that I had when it comes to Shift. But with all those concerns, I do want to remind people why I personally got into this company. First, the company is expected to do $620 million in revenue in this past year. So when we compare the revenues to last year, they have 4 times the market cap in revenues. And they're projected to do $1 billion in 2022. The question for anyone who has either bought Shift or is thinking about buying Shift is, do you believe the company is going to go bankrupt? If you believe that they will get through this or that they will be bought out, then there's no reason in my opinion to not be buying at these prices. Second, the customer acquisition costs have decreased substantially, which will lead to better profits. And the beautiful thing about this is that I'm not saying year over year improvements, but in the past 3 quarters, their customer acquisition costs have been cut in half. And so the new marketing strategy that they've talked about a few quarters ago is demonstrating significant improvements for the company. The last thing to remember is the company has 3 times the amount of current assets as they do current liabilities. Now, of course, this isn't including their floor plan financing, so we'll have to see this in the upcoming earnings report. But when you consider this ratio, Shift Technologies is valued for what they are right now. And investors that don't want a piece of this company are believing that the best is behind them. But with all that said, what are my thoughts when it comes to this company right now? Well, I still think that the pricing is silly. And until I see evidence that Shift won't be able to improve on gross margins, it doesn't make sense as to why this company is priced for bankruptcy. And that's why I don't mind adding a little bit more to this position. Of course, there are concerns, but when I go back to the fundamentals of this company and how much they've improved on their overall business this past year, it gives me confidence that no matter what ends up happening, whether they get bought out or not, this could still be a great business. But I hope you guys enjoyed this video. If you don't mind, would you consider smashing that like button? It helps this channel immensely, as well as comment down below your thoughts on Shift Technologies possibly getting bought out. Would love to hear your thoughts on that. And if you are new here, hit that subscribe button down below. That way you are notified when new content comes out. Hope you guys enjoy the rest of your week, and we'll see you in the next one.